Good morning and welcome to Craft CPAs. My name is Scott Murty. I lead our healthcare consulting practice here at the firm. And this is, I think, our fifth or sixth healthcare helpings that we've been doing. It's a series of items related to medical practices to help you operate more efficiently and in compliance. And today we're going to talk about just best practices in general. In a couple months, in June, I think it's going to be June 7th, we are doing kind of an interesting topic on blockchain and how it relates to healthcare. So that should be exciting. But today we're going to talk about best practices. I'm going to start out by introducing our panel, who most of you know. Lucy Carter will be starting out. Next to her is Gina Pruitt. Lucy and Gina are both partners here at Craft. And Lucy leads the healthcare industry practice, and Gina leads our IT assurance, risk assurance practice. Next to Gina is Stacy Sternberg. Stacy is a senior coding compliance auditor in our healthcare consulting practice. And then finally we have Jessica Benson, who works in Lucy's practice in the healthcare industry practice and is a supervisor there. So with that, we're going to go ahead and get started. I'm going to turn it over to Lucy, and she's going to talk about best practices for deterring fraud.
Good morning. Everybody made it through the rain. When we think about deterring financial fraud, and what I'm going to talk about is financial fraud, and Stacy's going to talk about fraud that occurs in the revenue cycle. But I want to take a minute to look at, you want to steer? Okay, thank you. Look at the fraud triangle, because this is a model that includes the elements and factors that can enable fraud to occur in your medical practice. And the fraud triangle is made up of three sections: pressure, rationalization, and opportunity. So let's take a really quick, simple example. Let's assume that we have a front desk employee in a practice, and the weather forecast has come out and it's going to snow. It's already snowing in Memphis. So what do we need to do on the way home? Get food, milk and bread, right? We're going to starve to death. Alcohol, yes, important, yes. So this employee's sitting there and she didn't bring her checkbook. Credit card's maxed out. So she's got financial pressure, right? Well, there's an opportunity, because in her drawer is a $20 bill. And she knows that the cash drawer is not counted until in the morning. So her rationalization is, I'm going to borrow this $20 bill. Maybe it won't snow, and I'll come in the morning with my checkbook, and I'll replace that cash with a check. So a very simple example that shows when all of these factors exist, even the most honest employee can do a bad thing. So when we look at deterring and detecting fraud in the practice, we want to look at four areas to watch. And you want to think about your practice and where are there, opportunities for fraud to happen and opportunities for it to go undetected. So we've identified these four areas: cash, accounts receivable, accounts payable, and payroll. Now, when we look, we think back to that fraud triangle. We couldn't do anything about the employee not having their checkbook. But we can do things about decreasing the opportunity for fraud. And that's what we want to talk about a few minutes this morning, or what are the controls that we can put in place to deter and detect fraud. One of the basic controls and most important controls is a separation of duties. Anytime you have one person handling the entire cycle of a transaction, you increase the chance that fraud's going to occur. Not only that it's going to occur, but that it will go undetected, because if I'm handling the entire cycle of this transaction, then I can cover up what I've done. For instance, in cash controls, you don't want the same person collecting the payment from a patient, preparing the bank deposit, and posting that payment to the patient's account, because there's an opportunity with the $20 that I've stuck in my purse to go to Walmart that I will never replace that, and it will go undetected. Make sure that you make deposits daily. This is a very simplistic thing, but you would be surprised how many practices do not make deposits daily, and make sure they are intact. And what that means is to make sure that whatever is collected is what goes to the bank. Do not take $20 out of patient receipts to send an employee to Walmart to buy toilet paper. Make sure that that cash goes directly to the bank intact, and prepare a daily reconciliation of over-the-counter payments with what's deposited. Using electronic payments is good. A lockbox is good. You think employees can't steal checks, but they can, because the bank does not go in and check who the payee is when you make that deposit. On the next slide, petty cash is a bad idea, but we all have to have a change fund. So make sure that your change fund is used just for change. Using cash in the office to buy supplies and that type of thing is really not a good idea. Look at your daily report and compare it with collections that have come in. And this is important not only from a fraud standpoint, but a revenue standpoint. If you're looking at office charges, you should see co-payments, and you should see collections from patients for what their estimated patient responsibility is. So if you don't see that, that's probably not good revenue management, and it could be an opportunity for fraud. Reconcile your bank deposits to what's posted on your billing system, to what shows up on your financial statements every single month. Those numbers should agree, and if they don't agree, they should be able to be reconciled. When we look at accounts payable, you may not think about accounts payable. I mean, we all kind of concentrate on cash and accounts receivable, but accounts payable is another way that fraud can occur. You want to make sure that any time there's a new vendor, that new vendor is approved. Why? Because an employee can set up a fraudulent vendor. They can set up their Uncle Joe and issue an invoice for Uncle Joe, and before you know it, payments are being made to Uncle Joe, and it's happened for a year, and that money's gone. Do not return signed checks to the person that is doing accounts payable. That gives the opportunity to change the payee or divert that payment. Same thing, we're going to talk about refunds in a minute. You don't want patient refund checks going back to the person that issued the refunds to be mailed. Never, ever, ever, ever sign a blank check. Do not use a signature stamp. We actually had a client once that had a lovely signature stamp, and they had written a check for, I think it was $3 million to transfer to another account, and signed it with a signature stamp. And I said, if this doesn't make your blood run cold, I can't think of anything that is going to get you concerned. On accounts payable, most of the software that we use now, accounting software, has controls built in. So if you use the accounts payable program and an employee tries to put in a duplicate invoice, it will flag that. It won't let you put in duplicate invoices to pay, which can help with issuing duplicate payments and then getting refunds and pocketing that refund. Use passwords for authorizing wire transfers. I was telling Shelley, and make sure you can remember your password. And if I can't convince you to do anything else, make sure you look at your monthly reports. Look at your monthly financial statements. Take time to do a budget. And look at those reports each month. If your income is going up, revenue is going up, you would expect to see the total dollars spent for medical supplies to go up, right? But the percentage of medical supplies to revenue should stay about the same. So if it's running 5 or 6% and then all of a sudden it jumps to 10%, that's an area you need to investigate. So you want to look at your financial statements by category, percentage, compared to the prior year and compared to budget. And then looking at benchmarks is always a good way to kind of gauge your performance with your peers. Accounts receivable controls. One of the areas that, and like I said, Stacy's going to talk about, fraudulent billing activities, but patient adjustments. If I'm going to take $20 and I want a patient account to, jive with the patient so the patient doesn't get a bill, if I have the opportunity to adjust that patient account, I just post a patient adjustment. Patient's happy, they don't get an invoice. cash and deposits balance, so who's to know? So you want to make sure you really take a careful look at those adjustments. Look at a report each month. Make sure your adjustments are detailed enough so that you can determine what the adjustments are for. Don't just have contractual adjustments in other. Make sure you're looking at timely filing, medical necessity, bad debt write-off, no pre-cert, no loss, and analyze those adjustments because, like I said, that's, not only good practice management, but it's a good way to, determine if there is any fraud going on in the practice. Review your credit balance aging on a monthly basis because that is money that you technically either owe back to a patient or you owe back to a payer. We now have the 60-day rule. Everybody knows what the 60-day rule is. So we have 60 days from the time we identify an overpayment to refund it to a government payer or to a patient that is covered by a government plan. If we don't do that, we can be subject to false claims, which is a very nasty thing and very expensive. Looking at payroll. Now this is an area that you really need to pay attention to. Small practice, large practice, but multi-office practices, making sure that you're keeping up with with employees that have been terminated and make sure that they come off of payroll. If you have new employees, you want to make sure that they're authorized. You don't want ghost employees to show up on payroll. Make sure that all payroll increases are authorized. Once again, looking at your financial statements and looking at reports, looking at your payroll reports, having somebody review those is a great way to determine and make sure that nobody's giving themselves a raise you don't know about. Also, does everyone cross-reference new employees with the OIG database? Yes, great. That's another requirement that we want to make sure that we comply with, and never sign blank payroll checks.
And check that database on a regular basis.
Absolutely. Check that database because it can change. They may come in not being on the database.
I want to put a plug in for you. About 3 months ago, you mentioned that in 1 week, and I was like, I don't think anyone in our practice does it. And sure enough, went back, talked to our audit compliance committee, and it was just a quick administrative matter. It was like, okay, HR, we want you to check this every time you onboard. And for them, it was like 5 minutes. They checked the box.
Right.
But without coming here and listening to you guys, I know that, I think our practice would just, continue on without doing it.
Another thing you can consider is checking it against the Death Master file,
Yes.
which comes from the state, because the Death Master file has all the Social Security numbers for people who are dead. And sometimes somebody will pick up one of those Social Security numbers.
We're recording this, so we're trying to get everything in the mic. Otherwise, it won't pick up in the recording.
On expense reimbursement, this is another area that can be subject to fraud. Make sure that you have good forms. Always get original receipts, because if you don't, folks can doctor up receipts. They can take a pre-existing receipt and doctor it for reimbursement. If you have a company credit card and they have access to the company credit card, always check those receipts against what has been charged to make sure you're not doubling up on reimbursement. Also, when you're looking at mileage, look at prior mileage requests, and if it's unusual, then that's something you need to think about investigating. Best practices for deterring fraud is to set a good tone at the top. The management needs to exhibit ethical behavior, because your employees are going to model what they see. Reconcile, require mandatory vacation, because a person that's exhibiting fraudulent behavior is probably going to be the busiest person in your office that can never take time off because they don't want anyone to see what they're doing. Implement a fraud policy, set up a mechanism for whistleblowers, and make sure you bond your key employees, because at least if you do that and fraudulent behavior happens, then you would be insured for that behavior. I would say anybody that really handles cash, accounts payable, anybody that has the opportunity to, commit fraud, then you want to make sure that they're bonded.
Some practices just aren't big enough to have all those separation of duties like
Right.
we'd like to see, and so sometimes there are instances where someone may have, certain controls that can't be separated, and that's a good place to have that.
Yeah, and a lot of times that may, you may, if you use a bonding company, then that may bring to light that there's been bad behavior in the past. Because one of the bad things with medical practices is a lot of times folks will commit an act at Jack's practice, and then they move to Kim's practice, and Jack didn't do anything. You just let him go, and now Kim's got that problem. So, sometimes bonding may bring up that past bad behavior.
One thing to point out as I look around this room with fraud, the most likely person to commit fraud, particularly in a healthcare setting, are middle-aged white women that have been with the practice for a number of years. They're your most trusted employee. So look around the room, not pointing anything out, but that just happens to be the most common area.
I will suggest too that if you have a small practice and you can't segregate duties the way you would wish, then you can add some monitoring controls. That would be a mitigating control, where at a higher level, either you spot check or you monitor certain transactions and processes so that you know that if a person is doing more of that chain than you feel comfortable with, you can have a mitigating control in place.
Does anyone else have any questions on this subject before we move on?
The cost of bonding, I mean, you said that you can't afford not to do it, but is it prohibitive, is it expensive to do for smaller practices?
Sure, and I'm going to repeat the question just for the recording purposes, but the cost of bonding for a small practice.
Yeah, the cost of bonding is really cheap, very cheap. Yeah.
And that's over and above coverage that you would normally have in like your D&O and E&O insurance?
Yes. Yeah, you want them bonded for fraudulent behavior, for theft, basically. Yeah.
Where D&O is just errors of omission.
Right. Yes. Yeah.
Any other questions? Yes.
Oh, I was just going to make a comment. If you use remote deposit, you can do dual control on that also.
Dual control on remote deposits.
Yeah, absolutely. And I just can't impress enough how important it is to get the money in the bank. I mean, we had a situation, Stacy's laughing, we had a situation last summer where a office manager did not want to deposit the money until it was posted. So checks were stacked up. Actually, some of the checks were out of date.
And then they were 6-8 weeks behind on posting.
Right.
Those checks were filing, and there was cash piled up too, right?
Yeah.
Yeah, and credit card numbers that had not been run. And literally, this was a conference room size table, and the checks were not they were five.
Microphone, Stacy.
There was a lot of them. I don't know if this is on.
Yeah, there are a lot of checks. Yeah. So.
You talked about bonding also. How deep down do you go in your billing staff? Like billing manager, supervisors, maybe the person who, because there's a lot of people that can make adjustments.
So what staff should be bonded?
I think, when it comes down to it, you've got to hold people accountable. So if you have a supervisor that's supposed to be monitoring that, then you would definitely want to bond them. Like I said, it's pretty inexpensive insurance. So there's really, you don't want to bond a scheduling person, or clinical folks. But, really almost anybody in your business office.
All right, with that, we're going to move on to Gina, who's going to talk about HIPAA, high tech, and high trust.
All right. So we all know what HIPAA is, I'm sure, and we've done some things in our practices. We've put up the sign, and you have people to sign in if you're in a physician practice, sign off that they recognize what HIPAA means, and they give you authority to do what that you need to do with their patient record. But, you know, that's not really what HIPAA started out as. It came into being in 1996, and it was really originally meant to protect workers when they changed jobs, to make sure that they could retain insurance. So it has evolved quite a bit since then, and you'll start noting, if you haven't already, that there are a lot more auditors or examiners, so to speak, coming about and going out to do these audits and making sure that everybody is HIPAA compliant. Well, that started happening really with the evolution of HITECH, when HITECH was enacted in 2009. So HIPAA evolved during that time frame between 1996 and 2009 to be more around the security of patient information and just PHI in general. And so the one thing that we always say in my area of the business is that just because you're compliant with something doesn't mean you're secure. And what does that mean? Well, that means you can have a lot of policies and procedures in place where you feel like you're HIPAA compliant. But when you look at what the security and privacy rules really are, if you, for instance, have an annual HIPAA risk assessment, risk analysis, we get into some depth around who has access to what, all the behind-the-scenes network access and what can be done with regard to accessing that PHI. And so when HITECH came along in 2009, and really much later, the penalties became steeper in 2013 with the Omnibus Act. And so when that came into play, I think the federal government thought, hey, we've been missing a window of opportunity to make money, right? It's all about money. But in order to do that, they had to hire people to be examiners. That's why nothing had really happened when HIPAA first went in place. It's because they didn't have the examiners on board. They may have had a few, but they were just really picking on the big organizations, the HCAs of the world, or, you know, the tenants. And so now they've got many more examiners. Some of them are independent contractors, and they, you know, pick them up when they need to, or they hire them in general regional areas, so that if your organization, for instance, got picked for an audit, and we don't know how you get picked for an audit, by the way, but if you got picked for an audit, they may have somebody in Nashville that they could pick up as an independent contractor to come and visit your office. And so with that became more penalties, more stipulations around your business associates and what business associates have to do and what you have to do to make sure that they're doing those things as well. And then new breach requirements. So the breach requirements relating more to all these things that have been happening in the world and in other industries with retail organizations systems being breached and that type of thing really led up to that. And the breach notification process is a little more detailed now than it used to be, because the government wants to know what happened. They want to make sure that you're also letting your patients or your customers know that that has happened, not just the ones that were breached, because sometimes you don't know who or what all has been breached. Even though you can go back and do forensic audits or something like that, you just don't know that you've caught everybody, so you have to notify everybody. And you have to take specific precautions around those ones that you know for sure were breached. But then there's also money involved in that as well. So they're going to get their money one way or the other. From the standpoint of HIPAA and HITRUST, those are both regulatory. They're laws. But when we get to HITRUST, HITRUST is not a law. How many of you have actually heard of HITRUST? Yeah, it's I would say fairly new, although it's been around about 10 years. It's just now getting more knowledgeable. You know, people are starting to pick up knowledge about it, because the payers, the large payers, are really starting to get active with putting in their contracts for any third-party vendors that they use that they have to be HITRUST compliant, or they have to have a certificate basically through HITRUST.
Certification is like an added level of assurance.
It is. And it's a very involved process. It's much more involved than HIPAA. You know, when somebody comes out and does a HIPAA assessment, it's just some basic controls around the security and privacy. When you get into HITRUST, you're talking about a complete comprehensive security framework, and it overlaps with, if you've ever heard of NIST, the National Institute of Technology, it overlaps with HIPAA, it overlaps with PCI. Like if you take credit cards, sometimes you'll have to do a PCI self-assessment. It overlaps in those areas. It's mainly built around ISO 27001. I know everybody doesn't know what that standard is, but you know, if you ever want to look it up, it's some good nighttime reading, put you to sleep. But it's very expansive around your whole network of the security around the perimeter of your computer systems, your servers, anything that's going to be on your workstations, laptops. If you're able to access your network from home, which is usually through a virtual private network. But this is what HITRUST is about. And it's really one of those things that right now nobody's had to worry about in the physician practice arena, but we're HITRUST assessors, and so I get all the information from them about what's coming down the pike, and we have seen emails that they are working on a smaller business level product is what they're calling it, but that's what they're really saying is a physician practice model for this HITRUST framework. Now, is it going to be required? We don't know that yet, but I would think it would evolve to that point because the payers, if they're starting with their third-party vendors, they're probably going to hit, you know, they'll go by larger size, but they're going to start hitting some of the physician practices that they work with, and hospitals, I would assume.
Are there certain payers right now that are requiring this for their other third-party vendors?
Yes. We have seen Cigna, Blue Cross Blue Shield, Aetna. We have several clients that we did other work for, and then they would say, hey, we're being required to do HITRUST by, and most of them were required to do it by January 2018. That was what most of the payers were requesting. But they put it in those contracts, and people don't really know what that means. And so about 6 months before January 2018, we started getting phone calls. We got to be HIPAA or HITRUST compliant by January 2018, and we're like, that's not going to happen. It's a long process. Even with HIPAA, if any of you have had the HIPAA risk analysis, the first thing you do is you do a readiness review. Obviously, you don't want to document for potential government examiner to come in and look at your HIPAA risk analysis and there be a lot of holes in it. So you're getting prepared for that. So you want, you know, about an 18-month process where you're doing a readiness review, you have some time to correct it, and then someone comes in and does the actual annual HIPAA risk analysis that you will use on an ongoing basis. That's the way HITRUST is as well. You have to have a period of time to prepare yourself for all the requirements, because the requirements are much more in-depth even than HIPAA. And although you can say that something is not applicable, you have to explain that. The HITRUST organization itself, when we're working with them, we're the middleman. So we would work with you. You would tell us what you've got in place. We would confirm that you have that in place, or test a control or whatever it might be to make sure that, yes, it's actually in place. We pass that along to them. We upload it into a GRC tool that they maintain, and then they score that. And there's certain score levels that you have to meet for them to certify you. So they tell us and they tell you whether you're going to be certified or not. If you're not certified, you're called validated, and the validation process then spits back out some things that says, here are some things you need to work on before you can be certified. So you see there's a period of time that you really need to lay out. You can't do that in a 6-month period. It's just not conducive to you being able to do your day-to-day job and do that as well. The common controls for all of these areas, some of the things that we look for, obviously documented policies and procedures. Most everyone has the policies and procedures. Now, whether those are being followed the way they're documented or whether the procedure is actively in place in some other manner in which you've documented it, that's what we test for. And then HIPAA and security awareness training, and those can be in the same training, but sometimes they're 2 different trainings. Some people like to do a HIPAA training that's online. Some people like to do a security training that's online, or some are face-to-face. We tend to do, in our organization here, we do security awareness online as well as face-to-face. So there's something all the time that we're doing, or we may be sending out emails about what's the latest phishing scheme or whatever that might be. We're trying to, it's a dynamic process for keeping people trained in this. And then you want them to acknowledge it. You want to have documentation that all of your employees have acknowledged their responsibilities for HIPAA, high-tech. If you've got HITRUST, then HITRUST requirements. And that's, they're signing something for you to keep in the file to show examiners if you were to be audited. There's also something that you might want to put in your, if you have like a manual, just a policy manual for new employees, that you need to be aware of what you're responsible for around HIPAA. Even if you acknowledge that you've done the training, you need to acknowledge that you understand what could happen to you if you don't follow our policies and procedures. And then data encryption is a key. I would say how many times data encryption is important, probably 10 times over more than anything else that we would recommend. And you want that encryption to be around laptops, emails, data in transit, data at rest, backups, anything that where data may reside, even paper. You want to make sure that paper, you have a clean desk policy. That's the bottom one. But that's how you manage paper, either clean desk policy, locked in cabinets when you're not there, those types of things. But the encryption itself, if you have that and you have a breach and you say, but let's say somebody stole a laptop or you lost your laptop, you can say, we've locked the laptop. It was encrypted and we've locked it, and so nobody can actually access the data that was on it. Then that will either eliminate the fines or significantly reduce fines. So I can't tell you how important encryption is. Like I said, it's probably 10 times the most important thing that I have on this list. Your annual risk assessment, inventory of your PHI, and then de-identification of the PHI if you're going to be using it with third parties. Anything that you can do to de-identify it. And there's special rules out there for de-identification. HITRUST specifically has rules that you have to follow for de-identification. It's basically you're putting down an inventory of where all your PHI might reside, whether it's on your laptop, your associate's laptop, it's on your network, on a server, or you've got it on paper and you're putting it in a file cabinet that's locked. Wherever you might have that type of information, either electronically or on paper, you have to have an inventory of that. Yeah. Right. Yeah. And so that'll help you, though, in case of an examination, because the inventory itself basically says everywhere that your PHI is going to be, and you've secured it. If you don't know where it is, how can you secure it, right? And then strong, complex passwords. We're going away from, best practice is going away from like your 8-character passwords that has a symbol or something in it or character in it, it's now going to passphrases. So phrases that somebody else wouldn't be able to easily guess. My dog's name is something, or something about someone in your family that nobody knows. So it's easy for you to remember, but nobody else would know it. I think that will keep evolving over years, but right now it's going away from the typical 8-character type password. And multi-factor authentication is pretty important to an external breach activity. If you have multi-factor authentication, you can almost eliminate those types of breaches altogether. Hackers will find a way in a lot of times on their own, but if you've got multi-factor authentication, they have a very hard time cracking that. That is when you have more than just your ID and password. You've got some other factor that you add onto it. The password is one factor, and then you add something else onto it, either a key fob or like for us, we get a mobile, on our mobile device, we get a code that we can enter, and it's a one-time code. It's regenerated every time that we have to enter one, we enter a new one. Physical access controls, everybody's aware of what you have to do around physical access controls, and then, as I mentioned, clean desk policy.
So, Gina, many of these practices use third-party vendors in a variety of areas related to PHI, particularly, say, a third-party billing company. That billing company needs to be in compliant with all this as well, correct?
Right. And that's one of the things that came out with the HITECH Act, is that what's your responsibility with regard to your vendors? Well, if it's a significant vendor, that like someone who does your claims processing, they may be HITRUST certified. They should have a HIPAA risk analysis. But the other thing that most claims processors will have is a system and organization control engagement, which back in the old days used to be called a SAS 70. If you ever heard of a SAS 70, that's an attestation where a firm like us comes in and does attestation around certain controls that are in place around the system. We can also integrate that with HIPAA and HITRUST, and we do that for some of our clients.
Any other questions for Gina right now? All right. Speaking of compliance, let's move on to Stacy. That's going to talk about compliance within the practice.
The exciting stuff. She says sarcastically. First of all, what is a compliance program? CMS defines it as a program designed to prevent and detect criminal conduct. Criminal conduct, Lucy touched on it, Gina touched on it. It can happen in a practice with 5 employees as easily as it can happen in a practice with 100 employees. It is vital that you have a plan in place. It includes everything from clone to EHR records. When you purchase an EHR, a lot of them, when they sell it to you, they'll go, oh, well, it has a copy and paste function that you can pull forward. Well, be very careful of those copy and paste, because it can lead to fraudulent billing. It can lead to a number of things. So it is so important, again, that you know what a compliance program is and that you have one in place. There's a ton of slides on here. I'm not going to go through all the laws and things. We had this presentation, a couple of months ago, and we had an attorney, J.D. Waller, that was here, and he put out some great information on the law. So I left those slides in there for you guys so that you'd have them as a takeaway, and to be able to use as reference, because there's some really good information in there. Mainly, I want to make sure that A, you know what a compliance program is, and B, that you realize that when you talk to clients, especially smaller practices, one of the things that you hear is they don't have time or they don't have the money to do a formal compliance plan. You don't have the time or the money not to do one, because if being proactive in this instance, and in today's society with the OIG and the work plan, it's going to cost you on the back end if you don't have these things. Not only could it be because of an audit, you know, it goes to those controls for fraud. Why is it important? We just sort of touched on that. It can help. Again, it's those proactive identification of areas that you're vulnerable. Where is it that, you know, my risk is? A well-designed compliance plan can speed and optimize proper payment of claims. It can minimize billing mistakes. It can reduce the chances of a government audit. And when I say that, you know, nothing's going to keep you 100% audit proof. But, you know, a lot of times we don't know how you're chosen for an audit, but we do know that CMS that uses data mining and your percentage of errors that's taken into account. So if you're billing, you send all this in and you have a high rate of errors, they have all that information they can pull, and they can say, maybe we should dig a little deeper into this. So again, it is just really, really important that you have this compliance and you understand. A good compliance plan has, there's 7 core elements that it encompasses, but at its most basic level, it has the internal practices, policies, procedures, and standard of conduct that the organization puts in place that says, okay, I'm in compliance with the law. I am, and that's the bare minimum. Again, it's going to make your operations better. It's going to improve quality of care, reduce overall cost, and be proactive and identify problems up front before they become costly. You know, a lot of times we don't, because we don't have this compliance plan and we don't have written policies and procedures, and you can't just write them and forget about them. You actually, once you take the thing and you write it, you got to make sure that they're being followed. It's one of those things. People do what you inspect, not what you expect. So you have to have things in place to know that, okay, these are being followed. People are paying attention, and this is what our practice. It's that culture, you know, that environment that says, okay, a culture of compliance. You hear that over and over now. You know, create that culture of compliance. Make sure, you know, train your staff. Make sure that the staff knows that this is our expectations. You know, that it's not, and as Lucy, I think, said, it starts from the top down, and there's a tone that's set. You know, make sure you have a compliance officer. And that's not just a title. Oh, because the law says I need one. Okay, I dub thee. It has to be. Ashley's laughing at me back there. But it really, that's a real job. And it's not a job that you give somebody and say, okay, I'm just going to give you that title, but I'm not going to really give you time to do it. It's on top of everything else you're doing. It needs to be taken seriously. And again, we touched on training. You know, make sure that you have training. And communication, I can't stress enough how important communication is, open lines of dialogue, because everybody at your practice brings something to the table. You know, the practice manager on down to the file clerk. Everybody brings something to the table. And that file clerk may notice something in their routine job that maybe the practice manager doesn't see. So, but if they have an open line of communication, something in place where these things can be reported or talked about or discussed so that things can be put in place, that is so important. Miscommunication is probably one of the biggest issues as far as where errors and omissions come from.
And if a staff person like that, like you just described, is not being heard, they're noticing things not being heard, it can certainly
turn into a whistleblower situation,
which no one wants in their practice.
Right. And, you know, now, and before I forget, everybody needs to bookmark this on their computer. You can sign up for their emails and alerts, but oig.hhs.gov. Know it, visit it on a regular basis. You know, the work plan's out there. It tells you what they're looking at, what the targets are. And it gives you a good idea of, and more so than that, it's also an educational thing. If you run into something where you don't know, gosh, how should I handle this? They have everything out there that they've ever researched, done, and it's by topic. You can search, and if you put in a topic, it'll pull every paper that they've done on that.
Is everyone familiar with the OIG work plan?
The HIPAA requirements are out there too. The laws for security and privacy are out there, and they give a lot of information and articles around that and guidelines on risk assessments.
Yeah, and you know, again, I sort of touched on this already, but internal monitoring and enforcement of standards. You know, make sure that you are monitoring what's going on, and make sure that you are enforcing the standards that you've put in place. Again, don't write them and forget about them. You know, so many times I've literally been into a practice where I have asked for policy and procedure, and not only is it not on their computer, it's in a notebook that has 6 inches of dust on it that nobody has ever pulled off the bookcase. It was written because somebody told them they had to do it. It's outdated. It is, again, I'm repeating myself, but I can't stress that enough. It is so critically important.
Stacy mentioned a couple of times about being proactive, and I can't stress how important that is to be proactive. Her and the rest of our compliance team have a number of clients that are very proactive, ongoing third-party audits, reviewing documentation and ensuring it supports the billing that's being done. You know, if and when, because it does happen, the government were to come in, review claims, they are much more lenient on practices that are being proactive, and they have this as part of their compliance plan, and they're following through. On the flip side, Stacy has clients that are not proactive, and we are called by them in a crap mode or through their counsel because they're scrambling, having huge paybacks, and it's kind of after the fact rather than making sure this is being proactive and being done ahead of time. So very different scenarios.
Yeah. Next, if you could go, yeah. I'm not going to, revenue cycle, it is not your biller. It is not your follow-up person. It is, go back one, Scott. It is not a single department or person. It starts from the time that person walks in the door to the time that account is zeroed out. You know, a lot of it, compliance is a part of every part of the revenue cycle. From the time that person walks in that door, be it, protected health information and HIPAA, to collecting money, it starts at the very first time. And if you go to the next slide, I've always been told this, and this is a really old saying, but in medical and healthcare, but garbage in, garbage out. Your information is only as good as that first contact with that patient. It is only as good as the information you get when that right before or when that patient walks in the door the first time. That dictates if you're going to get paid for that service or not. I broke the revenue cycle down. If you go back into one more, right there. I broke it down into 3 parts: access management, medical management, and financial management. And this is pretty known. If you go out, you'll see this methodology that other people use. But access management, it starts with that patient contact, the access to that patient, the access to that information, and making that count, making sure you get every necessary piece of information you can from that patient. You know, if they come in, a lot of times people will come in, I don't have my insurance card today. Well, guess what? I have to have that unless you're going to pay me. I mean, you have to do that. All of this, I'm not going to go through all this because of Jessica so that she can speak, but the very last slide you'll see I sort of did a chart. Wait, yeah, right there. Documentation, coding, compliant, peace of mind equals success. I mean, it sounds like a no-brainer, but it's true. So, that's it.
Before we move on to Jessica, do we have any questions?
Thank you. So how do the employees can complain or bring up issues too on compliance? In smaller practices, is it typically the manager, or should it be a third party?
So who to bring up compliance matters to?
In a smaller practice, I would not necessarily recommend the practice manager. I mean, it depends on how the practice is set up because, you know, people view the practice manager as their boss. But if they have somebody else within that practice or a third party, like a lot of times we have a hotline that we set up for some of our clients. We have an email hotline, we can do a phone number, things like that. But if they can do that, they feel more comfortable putting it out there, and they don't feel as threatened by that. So
I think it's important to note, if you look at fraud settlements, the majority of the fraud settlements now are as a result of whistleblowers. If somebody raises an issue, they are mandated to investigate. So you want to make sure that your employees have a feeling that things are being done right and that they are being heard if they raise an issue.
Because if you go out on that HHS OIG website, it's very easy for someone to file a claim.
Yeah, they're encouraged to. Okay.
All right, we're going to go ahead and move on to Jessica Benson. Last but certainly not least, we're going to talk about quality payment reporting.
real quick, I was going to tell you, if you go out on the HHS OIG website, you'll see a bunch of Tennessee cases. This isn't somewhere else. It's here. There's a podiatrist in Murfreesboro that just got a huge fine, and it was a whistleblower. So it's not, you know, in New York or Chicago. It's here.
Thank you, Stacy. All right, I know you guys are all excited to get back to work, so I'm going to make this quick. So everybody knows it's a hot button issue, the quality payment program, better known as macro, MIPS, and APMs. All those are interchangeable, essentially. So just a little background, CMS's purpose of transitioning into this new system is a way to move physician reimbursement from a fee-for-service schedule to one that focuses on quality. The way they're able to do this is by identifying and tracking various measures that correlate with that quality-based care structure. One benefit to the new model is that it allows practices and clinicians to be flexible in selecting their quality measures that are meaningful to their actual practice. So let me go to the next slide. Okay, so APMs are alternative payment models. It's a payment approach that gives added incentive payments to provide high quality and cost-effective care. However, under the new MACRA guidance, not all APMs are considered advanced APMs. An advanced APM is a subset of practice APMs that take on financial risk related to patient outcomes. Criteria is listed if you'd like further information. Next slide. MIPS, which I'm sure a lot of you are more familiar with, is the merit-based incentive payment system. The program is budget neutral. It simply stated means if somebody receives any type of negative adjustment for scoring under the bar, somebody actually gets a bonus. So that's how they remain neutral. All the participants within this program, anybody that bills under Medicare is a participant in this program unless they're significantly participating in an APM, they're a Medicare freshman, or the provider is excluded under the low volume threshold. Significantly participating in an APM means that 25% of the provider's payments or 20% of the Medicare patients are seen through that specific APM. Scoring for MIPS is done in 4 parts, allocated by quality measures, advancing care information, improvement activities, and cost. Submission of each category can be done through various methods, such as claims, attestation, EHR, and qualified registries. However, only one method for reporting category is allowed. It is rumored that CMS will allow multiple mechanisms per category in year 3, but they were supposed to do that in year 2, so we'll see how that goes. Next slide. So I know that there's a lot of issues going on under the program right now, but being a small practice under the new reporting system does seem daunting. CMS has attempted to offer some level of relief to the smaller practices. A small practice defined by CMS is a group with 15 or fewer clinicians. They have increased the low volume threshold, so it's clinicians who bill, groups or clinicians who bill less than $90,000 in allowed Part B charges or less than 200 Medicare beneficiaries. CMS is awarding 5 bonus points to the final score of all qualified small practices, and they also say there's strength in numbers. So there is a virtual group reporting option for small practices and individual clinicians to kind of join forces and report under the same umbrella to increase their scores. I'm trying to go really fast, sorry. Okay. So just a few notes on the changes to the performance categories for 2018, or from 2017. Cost is actually now in effect. In 2018, no reporting requirements or actions for participants. This is automatic, done through claims by CMS, so they're going to award you a score. Don't you just love that? They just get to pick. In the advancing care information category, there's no changes to the actual base objectives and measures criteria. So the base objectives and measures include security risk analysis, e-prescribing, providing patient access, sending a summary of care, and requesting and accepting a summary of care. So it kind of falls into like all the HIPAA and the compliance and things we've been discussing. There are opportunities to achieve bonus points, and that's using 2015 Certified Health Record electronic technology and attesting to one of the improvement activities under that certified technology. CMS has issued hardship exemptions to federally declared disaster areas. This results in an automatic budget neutral assignment for any clinic or group affected by the disasters in 2017. If a clinician or group in these areas would like to submit performance data to increase their score, that is acceptable but not required, so it's an automatic assignment. There are exemptions to the advancing care information that can be made for specific insufficient internet connectivity, a lack of control on the availability of the certified technology. However, those exemptions must be requested through the application process, and it must be done by 12/31 of the current performance year. So 2017, the window is closed. CMS will then reweight the ACI's performance weight to the remaining 3 of the categories. Okay. No, this is good. So as previously mentioned, in order to get any points for the advancing care category, one must meet the base objectives and measures. However, there is some relief for those who don't qualify for the full ACI exemption. The 2 exclusions that are available can still allow you to achieve your full base score, which then allows you to receive your bonus and your performance scores on top of that. These exclusions these 2 exclusions are for e-prescribing and the health information exchange. The e-prescribing exclusion is allowed when eligible clinicians write fewer than 100 permissible prescriptions, and the health information exchange exclusion is allowed when an eligible clinician transfers or refers a patient to another setting less than 100 times during a performance period. Okay, so now for the stuff you really came to hear about. Sorry, I told you I'd go through it really quick. So in 2018 is only performance year 2 of the quality payment program, and as I'm sure we all suspect, it's only going to continue to change. That is until we all get the hang of it, and then there's going to be a whole new program put in place. So in order for you and your practice to achieve and maintain a positive payment adjustment for now and many years into the future, it's absolutely imperative for you to establish this strong foundation now. Some of our recommendations are to identify, similar to your compliance, identify someone within your practice to take point on macro reporting and compliance. Having that one point of contact allows a smooth flow of communication throughout all levels of the office. That individual can then identify the internal MACRA team for a position respective responsibility in reporting compliance, because it takes a village. It's not just one person. So everybody's got to kind of talk and work through that. Be sure to check provider eligibility via the qpp.cms.gov. Don't just assume that the clinician is participating or that they're exempt. You don't want to be caught not reporting. Review your performance categories and specific measures of each. Select the measures that actually apply to your office and align with your practice model. I mean, you don't want to select a measure that has absolutely nothing to do with your practice. And finally, review feedback. The only way to improve your scores is to understand what you've done in the past. Data is your best friend. PQRS, Meaningful Use, gave feedback. Use that. You should be getting transition year feedback if you submitted data. Use that. But that is the number one way that you're going to be able to achieve your highest score and maintain that. So, and if you have any questions, please call us.
Thank you, Jessica. The panel is happy to answer any questions now related to any of these topics or anything related to your medical practice. Also, in your packet, everyone's email and phone number is listed in there. Feel free to reach out after this as well. Do we have any questions? No? Well, thank you very much for coming out and fighting the traffic and rain to be here today. We really appreciate it. Thank you to our panelists, Lucy, Gina, Stacy, and Jessica. And just as a reminder, we do have our next Healthcare Helpings slated tentatively for June 7th. It will definitely be early June. As soon as we have that date confirmed, we will let you know. But it's Blockchain for Healthcare.